Okay.
Okay. Hello, everyone. Thank you for joining us today. I'm Cliff Cheek with the Cheek team of Keller Williams Realty. I've got Peter Martino here with me of Rate, Guaranteed Rate. And Peter, today we're going to dive into a little segment on rehab loans, get your expertise and some information as to how we can help our clients with getting into some homes and getting rehabs going on things that may be needed, some updates and that kind of thing. How are you doing today, Peter?
I'm doing great. Sounds like a good idea. Let's do it.
All right, that sounds good. Well, so with the way the market has been going, it's been absolutely crazy the last 2 years. We have seen the market slow down just a little bit through the end of the year. I think with rate hikes, and you've covered a few videos on that of how that has taken some of the buyers out of the market. I think that people are starting to get a little antsy and tired of waiting around for rates to come down, so they are looking to purchase homes. With that, there are a lot of new starts here in Brunswick County. A lot of new builds. However, as we saw through the pandemic and the last couple years, new construction really takes a long time. We're looking at right now on average about 9 months for a new home. And with a family needing to get into a home, that may not be the most feasible time frame for them. So we've had a lot of clients that have been looking at existing homes, homes that were built, in the 70s, 80s, early 90s, have some outdated features, some, not the most desirable finishes in the home. And so, Peter, what can you tell us if someone's looking to come in and purchase an existing home? What is it? What does it look like for them to be able to purchase and possibly get some work done that the home needs? Update a kitchen, update baths, or maybe put in
Mhm.
some new flooring. Give us kind of a rundown of what they may look at with a reno loan.
Yeah, sure. So it and a renovation loan falls into sort of two categories. The one is that a home may be in a state of repair or disrepair where traditional financing wouldn't even be possible because it's not habitable, excuse me, at this time. Um, or like you just mentioned, it might just be outdated and just needs a complete overhaul, more than just paint. And for the properties that are not habitable, a renovation purchase rehab loan is perfect for something like that. I've seen many cases where people are able to really get in and get a steal on something and turn it around, and have a really nice home. And on the other hand, the home is habitable, but they just want to improve it. They don't have that extra cash kind of lying around. And so the purchase rehab in that situation, which I keep saying purchase, but it is allowed on a refinance as well. But we're talking strictly purchase today. That you could borrow those funds and fix the property up in that manner just the same.
Okay, that is wonderful. So with doing some renovations, you had mentioned homes that are not necessarily habitable in the condition that they're in, and of course that's going to take a pretty sizable rehab loan. If
Yeah.
it's something that they're looking to just update, if it's got the old gold and greens of the 90s throughout the kitchen or tiles,
Mm-hmm.
they're just wanting to update something like that. Home Advisor states that kitchen rehab could be anywhere from 15,000 on the low end to upwards of $40,000 for a pretty standard one. Of course, you can always go crazy and spend $130,000 on a kitchen
Sure.
remodel if you're going way over the top and doing really nice finishes and that kind of thing. But
Right.
with the complete overhaul of a home, what are you kind of looking at in terms of um, you know pricing for getting the loan? What is that process? If it's, let's just kind of work baseline off of a 1,500 square foot home. what would they be able to expect to get to be able to make the home habitable?
Okay, so again, that's gonna fall into what's needed and what they want to do. So if the total project is less than $30,000 and it's a conforming loan, meaning that it's below the 724-200, then there's two programs available. There's FHA, FHA 203K, and there's the Fannie Mae Home Style. One's conventional, one's government, and both are great. They also require when it's less than $30,000, it can be considered what's called a streamline, meaning that a consultant doesn't need to get involved, and the work is sort of it's less detailed. So there's less architectural plans, less it's just an easier loan. It's an easier job. So you have your cost of material, the labor, and it's less than $30,000. So we can finance that a little bit easier. When it gets above that number, then we're going to bring in a consultant that's going to oversee the job and work with the general contractor. The home is going to be appraised based on the aftermarket or after finished value. So there's a lot of different components. Let me back up 1 second, Cliff, and say that these rehab loans there's a lot of moving parts. And
Sure.
it's very important that you work with a lender that has experience in this arena, because if you don't, it can really turn into quite the nightmare. I'm not kidding. So you really need to work with somebody that's done these many times, has the experience, and can really guide through this whole process. Otherwise, it gets dragged out and becomes a very frustrating experience for your client. So that's number one. But then number two, all these things that I'm mentioning about guidelines and streamline and more than 30 or less than 30, that's where the lender is going to help guide your client and really get them into the correct program that it would be best for them. And we're not going to dig into all of those guidelines right now because there's a lot of them. But the 35,000-foot view is that these are excellent programs where you do have some choices and you do have flexibility on what can be financed, what you may want to leave out of the finance, and whether it's a small job or a large rehab project.
Gotcha.
I don't know if that exactly answered your question, but again, we don't really dictate what the amounts are going to be. The borrower, the purchaser is going to, along with their general contractor, on what the cost of all of that is going to be. And as long as at the end of the project, the value supports the loan, then we should have no problems at all.
Okay, perfect. That sounds good. And so, as you mentioned, the value supports the loan. Obviously, you want to get licensed contractors to do the work. And those contractors would need to be, I would imagine, submitted through the approval processes to make sure that everything is above board and proper permits are being pulled, that kind of thing. But with that, does the money get paid, I guess, directly to the contractor, and then they have an appraisal that assigns a value for the work that is needing to be done?
Yeah, so initially the first and most critical step is the approval of the general contractor, and he does or she does need to be a third party. You cannot be the GC on your own build.
I can't do my own renovations.
Can't do it. You can't get your brother Vinny to do the electric either because he's good at it. These all have to be licensed, bonded subcontractors that the general contractor oversees.
Of
And
course.
so initially the contractor is approved, and then the architectural plans and specs are approved, and then the appraisal is done based on that after completed value, and then the loan amount is ascertained from there. So you can finance up to 97% on a Fannie Mae home style program. It's not 10% down. It's not 20% down. And that's a very large misconception that most people don't realize, is that you can have as little as 3% into the transaction on the conventional, and 3.5% on the FHA. So that's number one. And then number two, once that first step is all completed, then there's a draw. The loan is processed, it's closed. Now there's a draw process. And the first is probably generally for materials. And then once the materials are purchased and they start to go in and they're inspected, once that clears inspection, then the next step. So on a small project, it could be 1 or 2 draws. On a bigger project, it could be 5 or 6 draws.
Sure. And so I guess when you're talking about the draws there, it operates very similar to a new construction loan, where there is a draw schedule for work to be completed, and they're checking along the way as to what is actually being done and making sure that the work that's being paid for is done properly.
Correct. And these loans are also, they start out as interest-only payments during the construction period, much like a construction loan. And then once the build is completed, it's a traditional principal and interest payout from that point. But the interest rate doesn't change. It's just interest only during the construction portion, and then principal and interest once it's all done.
Well, that's really nice, because as you're getting the work done, a lot of times I would imagine the homeowner, a buyer in this case, would be displaced, and not having to carry that full mortgage through the renovation process really does help.
Right.
They're just doing interest only at that point, and then it rolls and bundles into the full loan once they can actually move into the home and live there and start enjoying all the fruits of their labors and headache of getting things fixed up.
Yep. And that's absolutely true. A couple of guidelines that are important that I will mention is that these are typically primary residence and second homes. And manufactured homes are sometimes allowed, sometimes not. It's going to depend upon what work is going to be done. Okay. It may not. Manufactured homes gets a little tricky sometimes. Sure. And jumbo financing is available as well. The jumbo is loan amounts. We have loan amounts up to $2 million. And those are 20% equity positions on those. Okay, so those are loans above 724-200. And again, principal residence, second homes, no investors, no multi-units, and that's important for the homeowner to know.
Okay. One question for you with the jumbo side of things. So we've kind of covered the fact, of homes that are in disrepair. What if it's a jumbo situation, and the buyer purchaser would like to do some updates to the home, not necessarily that are needed, but would make the home more desirable, say like adding a pool. Is that something that would be considered, or is that something more of a want, not necessarily a need?
No, that can be considered. That can be part of the plan. We like to see that it can be supported in the market where it's at. So that's going to be considered just the same. I mean, if you're the only pool in your neighborhood, maybe that impacts marketability. Sometimes people want pools and they're desirable, and other times not so much. Maybe they're the maintenance factor in an area where it might not be supported. So that would sort of be on a case by case, I would imagine. But in an area where there's lots of pools, yes, that can be.
Okay. And yes, like you said, kind of appraisal dependent as well, to make sure that it lines up with a similar fashion of a lot of homes in the neighborhood.
Correct. Yeah. So that's pretty much the short of it. They do get more detailed, but if somebody wants to know more about that, feel free to give me a call anytime. And we do have a designated renovation department. It's all we do in that department. We're experts at it, been doing it for years. And if one of your clients are interested in that, I would love to speak with them.
Okay, perfect. Like Peter said, these reno loans, it really is kind of hard to put any kind of exact figure on it because it all depends upon what's needing to be done, whether it be a full rehab or just some updates to the home. But Peter is a great resource, has done tons of these, has helped numerous of our clients with them. And, just give Peter a call. He'll talk through it with you, kind of give you the ins and outs on a case-by-case basis, because that's really what these take, is really diving in and being property specific as to what updates are needed. So give Peter, Guaranteed Rate, a call. He's wonderful to work with. We'll put his info in the information below, and we hope y'all have a great day. And give the Cheek Team a call for any of your buying or selling needs. We're more than happy to help you on the front end with finding the homes, and then getting Peter on the line to let us know what can be done.
Thanks, Cliff. Have a great day.
All right. Thank you so much, Peter. I appreciate it. Have a good one.
All right, good. Excellent. Hey, Mary, okay.